Good morning, welcome to IG's early morning call. It's the end of a turbulent week, Friday 17th of March. Let's take a look at the headlines as we await today's start of the European session. There's a relief rally underway after the big news coming through yesterday, the First Republic being supported to the tune of $30 billion by US banks. And there's a dual-track policy approach ahead of the Fed meeting next week. 85% chance the markets are pricing in of a 25 basis point interest rate rise, 15% chance of no move at all. And in amongst the turmoil, gold remains the classic haven asset set for its third straight weekly gain. Let's begin with volatility. Yesterday was the biggest down day in terms of the body of the candle that we've seen since June, May last year. As we see money coming into the markets, we already knew at the beginning of yesterday's session that the Swiss National Bank had stepped in to try and stave off a crisis at Credit Suisse. And then we got this news, as I said yesterday, with the saving of what appears to have been a classic moment of intervention by a number of commercial banks to help out First Republic. We'll get onto some more detail about that, but that was broadly speaking what happened. And you can see, in fact, today's trade, we got a further tick on down for volatility, which gives me some sort of confidence for the start of today's European session. This is the London FTSE. The gains at the moment are fairly weak compared to the strength of the down move. Second day in a row of gains at the moment for the FTSE. We are looking for a slightly stronger start at the beginning of today's session. At the worst point this week, we were down 9.14% from the record highs we saw on the FTSE of, what was that, mid-February. And it is, I think, almost certainly going to be a week where we're going to see some relatively hefty declines in terms of the weekly candles. But this recovery is becoming interesting, but it is only just a retracement in what has been a very steep loss in these markets. And if it is just a retracement, it's just a question of finding another opportunity, I think, to go short. I'm looking for a breakdown below this 72.96 for then to be fairly confident technically that I'll then see a print down here at 67.04, which are the lows we saw back in October last year. Technical analysis doesn't always follow when you get some strong moves in the markets driven by some of the fundamentals. And if you get the fundamentals continue to play out on the upside, there could be this tug of war between the technicals and the fundamentals. But at the moment, at least, we are seeing gains in these European markets at the start. Same for the German markets. You can see the candle shape here. We're holding on to the gains that we saw yesterday in the 24-hour markets at 15,050. And the same again, exactly the same in France. We got this push higher today, small push higher on from the gains that we saw in yesterday's session. I think if we look at the candle shape here, interesting enough, we've got a somewhat shallower move on the downside we've had in the French markets. We've had in both Germany and or certainly in the UK. But the broad sweep of things is certainly looking as though we're going to see a start at the top of the hour, albeit by a relatively small margin. Let's look at what's been happening in the Asia-Pacific markets, remind ourselves as to the performance we got as we see money going into global equities across the board on from Wall Street yesterday through into the Asia-Pacific markets overnight. When last looked, the Hang Seng was up just shy of 1.5%. Nikkei doing brisk business as well, up 1.2%. Also money going into the Australian markets. Let's look at what's been happening on Wall Street. As of the close yesterday, gains across the board. And once again, it was the NASDAQ that was the outperformer on the upside. And I was looking at this chart last night, going in to the extended trade last night. Let's bring up the NASDAQ and look at the 24-hour markets. We ended not too far away from the top of the candle. And oh boy, what a move it was. And in fact, you look at this and you think to yourself, this is really an interesting move. If you get a break past the highs that we saw intraday back on the 2nd of February at 12,896, I'm then looking as though this market could go even higher, possibly up to the highs that we saw at 13,700 back on the 16th of August last year. There's a lot of water that needs to pass under the bridge before that happens. But nonetheless, this move this week has now been interesting. This is one of the few markets where I think we're going to end up the week, almost certainly, with a positive surprise. After hitting lows that we'd not seen since the 25th of January, what was that, on Monday this week, where we saw money coming out of the markets. It really has been a tech play on the upside this week, and tech's benefiting from the news they're hearing. I think more and more, as I say, weight beginning to err towards this idea that we've got these markets that are now looking at something less than what the Fed had originally been pricing in. Remember just a few days ago, Jerome Powell was talking about lots of upside still to come on interest rates. Well, that's now been blown out of the water by what we've been seeing. I just want to show you what's been going on the Dow. I think we're looking as though we could still nonetheless end up the week with a small loss. We're just bubbling underneath the 200-day moving average, second day in a row of gains. But the Dow this week went into correction technically, but it was a very, very brief move, and then we saw that pull back in the markets. Yesterday, US markets seeing solid gains after major US banks deciding to inject that $30 billion into First Republic Bank. We will go back to this in a minute, but as I said, market relief really making themselves felt with the tech stocks on the upside at the moment and indeed today. Looking for a slightly stronger start at the beginning of today's session on Wall Street later on. So let's get some up-to-date news now on what's been happening, because those gains have really come through. As I say, initially generated by the news, the Swiss National Bank late Wednesday night, stepping in with a lifeline. Credit Suisse taking 50 billion Swiss francs from the central bank. Large US banks injecting $30 billion in deposits for First Republic yesterday afternoon, which saw an earlier, we'd already seen a trigger of the upside on the equity market rally. I want to show you the First Republic direction of travel. This is the long-term chart from the highs that we saw back in November 2021, all the way up at $224. Then came this slide starting on Wednesday, the 8th of March, and some really big losses in this. And then came yesterday's rise, up 9.7%. Once confirmed, Republic Bank reversed that 36% drop that we'd seen this week, ending the session up 10%. But expect the stock to drop at the open this afternoon. Shares fell 18% in aftermarket trading late last night after the bank said it would suspend its dividend. So this is the cash close yesterday with a gain of 9.7%, but now down 18% expected at the start because of that dividend suspension. So the big question is, are we facing a liquidity crisis? Well, for the time being, policymakers are saying no. They've tried to emphasize that current turmoil is different from the 2008 financial crisis. They said data yesterday showing the US banks seeking record amounts of emergency liquidity from the Fed in recent days. Banks have borrowed now $164.8 billion from Fed facilities in the week through to the 15th of March. All this coming as we see central banks start to meet again. We've got the Bank of England next Thursday. We've got the Fed next Wednesday. And yesterday, the European Central Bank. Big question was for us yesterday morning in the early morning call, was the central bank in Europe going to go for some sort of caution and go for 25 basis points, or the full-blown 50, which the markets had been pricing in up until the recent market turmoil. And then yesterday, yep, they came through as expected, absolutely in line with forecast. The ECB not waning on its commitment to fight inflation. But as I said, next Wednesday, it'll be the return of the Fed to decide on interest rates. The dual policy approach is likely to be addressed next week, distinguishing monetary policy from the macro-prudential policy. US central bankers are seen pressing on with their inflation-fighting campaign with a 25 basis point rate rise, which would bring the Fed's benchmark rate to a range of between 4.75% and 5%. That said, expectations of a 50 basis point increase now completely blown out of the water. Remember that comment last week with Jerome Powell signaling he was ready to hike rates faster than otherwise might have been the case just a couple of 3 weeks ago. Fed fund futures now showing a probability of a pause of about 15%. This is the US dollar basket, second day in a row of losses for the dollar at 103.65. Now that move down in the dollar has given us some more upside we've seen for spot gold. In fact, it's going to be one of the best weeks for gold since mid-November last year. We're currently trading at 19.29. For me, the next line to watch for, obviously, clearly is going to be the highs we saw back on the 2nd of February up at 19.59. And then I think it's then on the way to 2000, which were not too far away from the highs that we saw back on the 18th of April. If you're long on this, stock goes below recent price action, down below the 1900 level. If you're long on gold, going into the European session today. We do have some economic data out today this afternoon at 12:30 p.m. UK time. Industrial production in the States expected to rise by a margin of 0.2% in February month on month. A bit later on, 2 p.m. UK, Michigan consumer sentiment forecast to remain unchanged at 67 in the month of March. I want to show you what's happening with the euro-dollar trade going into that data today. I was talking about the second day in a row of losses for the dollar basket. The way to trade that is by looking at this market here. We're currently trading at 106.63. Stop goes underneath the low point of the candle that we saw back on the 15th of March. So your stop at around about the 105 level. 106.63 is where we are. Price target on the upside is 107.87. That is if you see a continuation of this trend, money going into the euro at the expense of the US dollar. Ahead of that data later on today. We'll have to see how things work out. I can't see that economic data at the moment is really going to be king in terms of the direction of travel for foreign exchange markets. I think more commentary about what's likely to happen with the Fed next week and how the degree in which it takes its foot off the accelerator. Now, Federal Express has raised its fiscal 2023 profit forecast. It came out with numbers after the bell last night in the States, citing progress on its plan to shave some $3.7 billion off in costs from its global delivery business, really pumping up shares late in yesterday's session, up 11% in extended trade yesterday. FedEx is not an all-session stock on the IG platform, so watch out at 1:30 p.m. today UK time when the shares start trading on Wall Street. Adjusted earnings coming in at $3.41 per share in Q3. That's down 1.18 on the third quarter last year. 65 cents higher, though, than analysts' average estimates. So better than expected. Revenue falling 6% to $22.2 billion, missing Wall Street's forecasts. Now, despite weak market conditions, FedEx now forecasts adjusted profit of between $14.60 to $15.20. And this is really what helped shares late in yesterday's session. That was well above previous projections of $13 to $14 and well above the average analyst estimate of $13.56. Now, as I said, it's not all sessions on the IG platform, but what I can tell you is on Reuters, they are looking at something like around about an 11% increase on shares late in the session yesterday. So that would take us up then to levels not seen since the 26th of August last year. So watching potentially for a good start today when the cash session gets underway for Federal Express on Wall Street. Now let's move on to other areas of the market. I've covered what's been going on in the gold market, so I just want to pick up on what's happening with oil. This is the price of Brent. We've been following this week with it now below $75, and that's where it continues to trade with 74.82. This will almost certainly now go down as a week of losses. What's been happening? Well, the problem is that so far as the expectations are for economies, that the move up in interest rates has increased the chances of a recession. And of course, this week's concerns about the banking sector have raised further estimates for a possibility of a global recession. And this means that it's likely that we could well end up seeing some of the demand that we had earlier seen this year for the markets taken out. This week, we've seen levels not seen since the 21st of December 2021. Markets are moving up for a second day in a row. Total rig count last week falling by 3 to 749 last week. The number of oil rigs in operation fell by 2 to 590. We get that Baker Hughes rig count out at 6 o'clock this evening. Let me just move back onto charts. Just want to follow up on one other area of the market, and this is what's happening in cryptocurrencies. We have now got a very strong candle past that previous line of resistance at 25,240. We're now over 26,000 again. This is the first time, a couple of days ago we saw that, but I think this is really likely to be the highest close that we've seen since the 13th of June 2022, looking to me like a very strong move on the upside. That being said, back on Tuesday this week, that move up that we saw, as many were saying, Bitcoin now coming through as a safe haven. I remain skeptical about that. That being said, I am old school, and there are plenty of people that want to buy into any potential upside for Bitcoin, and those that are doing so at the moment are making money to the tune of a total value of Bitcoin at 26,104. That's it. Back at 10:30 this morning, we're charting the markets. Hope you can join us there for that, with a review of some of the charts as things develop. I'll also be back a little bit later on IG.com with a risk event for next week. We'll be looking ahead to the Bank of England as one of the events to watch out for in next week's session, alongside the Federal Reserve. Two big events next week to watch out for, I think, on the foreign exchange markets. That's it. As I said, back at 10:30.